Hello friends. I'm joined today by none other than Mr. Arijit Basu, the great stalwart of our banking and financial services in India. He's joined us today to help the Institute of Actuaries of India and the Actuary India magazine share his views and experience on how we can take our financial services industry to the next level and how actuaries can contribute. Hello, sir, and welcome to our episode. Sir, you've had a long journey in the financial services, starting from the grassroots all the way up, and you've gone through the journey. Could you tell us a little snippet into how that journey has been, and all the Gen Z today that's entering into it? What's their takeaway and learning that can be from your experience?
Thank you so much, Kunj, personally to you and to the Actuaries Institute for having me. It's a real pleasure to be with you, and I came to know about actuaries fairly late in my career, but a lot of, I know it's very tough, number one, to become an actuary, so congratulations to you and the very few who are actuaries in India. So my journey in finance started because I became a banker. I joined the State Bank of India after my graduation and undergraduation. You take a test and you join, and that was way back in 1984. And I have been in State Bank of India throughout. I have been a career person with State Bank of India. But State Bank, as you know, is now a conglomerate. They have many subsidiaries, and State Bank also has a very large life insurance subsidiary as well as a general insurance subsidiary. So I was given the opportunity to head the life insurance subsidiary as the MD and CEO between 2014 and 18, just under 4 years. And that is when I had to understand the insurance industry, got to know it much better, understand what actuaries do. Of course, a little bit I knew about actuaries when I was in the bank as well. And then, of course, got to meet people like you and found them incredibly intelligent, but very few in number. So that's broadly my background. And in the bank, State Bank gives you the opportunity to work across diverse verticals, So unlike some banks who have specialization, people specialize in corporate banking or retail banking or IT. In State Bank, you probably, barring one or two in your entire career, you would have covered everything, plus insurance, as it happened in my case. So yes, that's about me.
So I also have some very, very cherished memories of, coming and meeting you in your office at State Bank, when you were there. And one of the things, I don't know if you recall, was you used to have this glass terrarium, which used to grow little plants in it. And, you would take care to nurture it, clip it, put it, give it the little food that it needed every now so often, because it was an indoor terrarium and it was growing. And I remember we probably started visiting your office, early sort of 2016.
That's right.
And over 2 years, we were visiting you regularly, and we saw that plant grow. And you've almost done with the same care and nurture, grown with the State Bank of India as well as the SBI Life. So for you, what has been, one of those greatest achievements that you look back on very fondly, and you hope that the next generation in these institutions, carry those forward, through your tenure? What are those real?
Right. A little bit on the plant, actually, it was a very cherished gift given by someone. And not so much me, I would just admire the fact that it was growing well. But yes, people in my office also took a lot of care in seeing, and, plants, that's something about them. You can relate to what is happening in your world in which we live, and somehow it gets reflected there. But yes, State Bank and there are many, because it's been a long career. By the time I left the bank, I had almost spent 37 years, including the 4 years in SBI Life. And now it is about 39 years ago that I joined the bank. So Since I was able to play a role at the senior level and I was given that opportunity, so some of my very, very proud accomplishments would be what was achieved by the respective companies. So one was for SBI Life Insurance. It was the fact that after in 2017, when the company had, I think, done about 16 years of existence, it was set up in 2001, it could go ahead and list. And as you are aware, one of the reasons why we got deeper into the understanding of our business and do the actuarial valuations, etc., was because it was closely held prior to that by SBI and our joint venture partner BNP Cardiff. But we decided first to understand what the market felt about it by doing a stake sale. And the first very proud moment was when two of the most marquee investors, KKR and Temasek, they showed faith and gave a very good valuation for the company in December 2016, and State Bank decided to sell about 4% to them, 2% each. And that gave us the confidence that yes, this is something which has been very well built. And the second moment again was linked to that, was the fact that these two investors rated us very highly, and we were speaking to people like you also who were looking at the business, was that they said that yes, this has been there for 15, 16 years, but what it is currently achieving, at that particular point in time is, far ahead of what any of the competitors were able to achieve, not just in top line growth or new business premium, etc., but in terms of the depth of the business, the quality of the franchise, there are various qualitative parameters, as you are aware. In actuarial also, you give a lot of importance to them, and we seem to be doing very well in that. That was a very, sometimes when we work in finance, we get a lot of, we sort of pat ourselves behind the back and say that, okay, we've done very well because we've outstripped the growth target. But sometimes it is these bread and butter things which are more fundamental, and finally, of course, the most proud moment was when we were able to list, and it was a very smooth listing. There was a lot of interest by investors. It was oversubscribed many times. I don't remember exactly but I think 20 times oversubscribed, and retail investors also came in, but anchor investors and they are called the institutional investors. They came in large numbers from across the world. So SBI Life, and it was all due to the fact that we had an excellent team. It is not that I built it, only I built it. All my predecessors had contributed in that journey. But the team all came together to work as one, and we had set certain goals for ourselves which we were able to accomplish. Similarly, after my SBI Life tenure, I was given an opportunity to become the managing director of State Bank. We came back, and the bank was then in the second stage of the cleanup process, if I were to call it. As you know, Indian banks, for various reasons, had to go through a very, very difficult process because a lot of stressed assets, NPAs had been accumulated. And I do not wish to go into the reasons. There are multiple reasons for that, based on the ecosystem, the way the economy was doing, the way certain projects had gone wrong, certain decisions had been taken which were not very good for the banks, and banks also had done some mistakes. But our job at that time was to ensure that we were able to get this entire book cleared using the processes that were available. And it gives me great satisfaction to say that today SBI's results which are coming are very good, and all credit to the present team which is heading it, including the current chairman and the managing directors. But I think a lot of credit should also be given to that particular period between 2016, say, to 2020, when a lot of hard work was done to ensure that we were able to, A, clean up the book, and make sure that the bank is also on a very, very sound footing. And when you play a role in that journey, it gives you immense satisfaction. So at the end of my career, these I would reckon as my biggest achievements. But in the course of the career, in various assignments, you will have some very fond things you would recollect of having. Of course, the most common one which people would be very happy about is achieving targets, at the end of the year, and or being recognized either by some reward or getting your promotion on time. But those are routine things. But beyond that, there would always be one or two occasions which you will remember possibly throughout your life. And I think everyone would have it in a long journey, whichever career he or she has chosen.
Yes. So you, you talked about the bank cleanup, and almost 2 rounds of it have taken place, which fundamentally meant that the banks needed to reflect the risks that they were underwriting more accurately, more closely, and monitor them also, and prospectively so, rather than retrospectively. That is something that is also being talked a little bit about in the insurance industry now, of embracing a risk-based capital regime, which of course the banking industry has already embraced to a large extent, both global best practices and what's happened domestically. As the insurance industry goes down that journey, what do you reckon would be the most important learnings from the banking sector whilst adopting a risk-based sort of outlook to assessing capital into an insurance sector?
Absolutely. So, insurance and banking both have assets and liabilities, but intrinsically the nature of the business is different. So, that's possibly a good thing for the insurance industry, in the sense that the first priority for insurance industry always has been that I have collected premiums as an insurer, as an insurance company, from my clients, and I am committed to returning that premium, howsoever in the distance it may be. It can be 10 years, 5 years, 40 years, even if you look at whole life policies, even more than that. And my first priority is to ensure that I keep the client's money safe. Unlike in the bank, where that is of course a very major priority, but bank would also like to make sure that they are utilizing these the credit in such a way that they earn a return out of it. So in an insurance company, they may be very happy, keeping it in very, very safe investments, which is done. And the insurance regulator, therefore, is also very particular that, you don't overstretch yourself. Like bank is required to take risks, which an insurer is not required. Having said that, if an insurer wishes to give good returns to its customers, there are many multiple savings products in which you want to reward the customer, or even for a protection customer, you might want to, grow your own balance sheet in such a way that the premiums for the future customers come down. You would like to have a return which is reasonable, and yet the risk is mitigated. So one lesson which insurers can learn from banks is not ever go over the top, number one, in the sense that you don't have to do so many complicated things as a banker needs to do, because it has to look into the credit profile of, if corporate borrowers, a bank like State Bank of India has 2,500 of India's corporates in its books, which is a very large number. Or even retail, you have so many customers, you have to do so many other things. In case of insurance, follow the basic principles. As they say in cricket, you just ensure that you follow the basics, make sure that your defense is very strong, and then look for opportunities which is mitigated by something, which can be mitigated in some other manner. So one or two things, and you are much better, the actuarial science can actually help the insurance industry in doing it, is to look at ways in which you can, suppose you have invested and there is an interest rate risk, how you can hedge it. So some of these things in India are still at a nascent stage, early stage, But as we mature and as we grow, which the growth has been reasonable, so there have been 2-3 periods in the journey of Indian insurance since independence. First was in life insurance or general insurance. First was the period when LIC and the GIC subsidiaries were the only options. 2001 onwards, it was those companies plus the private sector companies. And now it has come to a stage when we can call it kind of a takeoff stage, when people are really expecting, density, penetration, these ratios to improve. So it will be a really, I think the IRDA chairman has said somewhere that from being the 10th largest insurance industry, we should become the 6th largest insurance industry in the next 10 years or so.
Not only has he said that, that's actually a projection from independent projections that have been done globally, that India is projected to become the 6th largest insurance market in the world.
Absolutely. So if that were to happen, the management of the risks of that size would also become very important. So the lesson would be that as you grow, you need to take risks, because for any financial institution, the fundamental is to take risk. Otherwise, there is no way in which you can function as a financial institution. But then your risk management also has to be equally strong and competent.
Right. So you talked about a little bit of actuaries and banks and insurance, and I want to bring all of those three together in some way. We in our circles often talk about actuaries in wider areas, and how actuaries can potentially go into banking and so on and so forth. Now you have a very unique perspective there, as being almost in a leadership position of the largest banking institution in the country, and also having interacted very closely as the leader of one of the largest insurance institution in the industry. So how do you see actuaries in a bank, and what role can actuaries play in a bank, and is that realistically possible and feasible, and how do you think that can practically be operationalized?
So instantly, Kunj, two things come to my mind. One is where for large institutions like State Bank and I suppose even some private banks, for example, in State Bank, one of the things that the bank has always had to closely monitor is the bank's ability to pay the pension dues for its employees. And that is something which, if you are a prudent bank and investors were looking at it, so we have been, State Bank has been reaching out to actuaries to get the actuarial valuation of the pension liabilities, how best, what is the correct this thing. We had the old pension scheme for a very long time. So that's something which the bank is fairly familiar, and we have been doing it. But the other area where I think it can gain importance in the bank is for example, you are aware that India still follows the Indian Central Bank, Reserve Bank, and we are very shortly going to change that, still follows the old income recognition and asset classification method of recognizing the assets, the quality of the assets. So it is actually the basic method which we currently follow is a scenario of actual default. So you provide for an actual default, whether it is an NPA or even if it is a short-term default, you set aside some part, and very little is done on a proactive basis, excepting there are some rules that 0.4% of your standard assets also need to be kept aside as a prudent measure. But with what is the IFRS regime, which the Reserve Bank has finally decided that Indian banks need to adopt, they will be now going into what is called the expected credit loss measurement for recognition of assets. And whenever you get into a scenario where you are anticipating something, I think two professions which, and today's world, three professions which will be of immense value to the bank are all the three who are associated with the business of prediction and probability. So one, of course, would be the statisticians who do modeling, and nowadays I said the second part is use of digital AI. you can have so many sources. And second, and the third one, I think could be actuarial, because in my way, while actuaries currently, I have faced actuaries either in the context of pension or insurance, where the work is very specific. But the kind of models, as much as I have understood, my mathematical understanding or depth is not very strong, but the modeling that is done is very similar to a modeling which could be done for anticipating the credit loss in an asset, and it could be something where the banking industry could benefit. But then the actuarial institute needs to probably widen the scope of the work or the scope of the learning that the various actuaries are doing into getting into that. This was just one thought which came. I don't know, you might have a better this thing, but I found some resonance in that, because actuarial, the fundamental of actuaries, as I have understood, is to use data which is available currently and do some modeling and prediction which will happen in the future. And an ECL method is, to my mind, essentially that. And so there could be some synergies which may come out.
No, this is really helpful, and I do look forward to some actuaries going into ECL calculations for banks, hopefully sooner rather than later. And shifting gears a little bit, sir, we taking a step back, we're talking in India now of rapid growth. We already said, about India becoming the sixth largest insurance market. We are talking in India about mid to high double-digit growth in the insurance sector, where the rest of the world is not even talking about, high single-digit growths. And there is a stated ambition of becoming, insurance for all by 2047. Given you've been involved very closely with the sector, what changes, if any, or what needs to be done more of, and what are the clear winners that you feel are required to really achieve that kind of growth that we're talking about? Given that we are starting from a fairly large base, of course, we haven't penetrated the market as much as we can in the numbers, but we still have a reasonable base that we are starting with. So to really achieve that, stupendous growth that we're talking about, what are the critical changes that we need to make that possibly we're not thinking of or doing little of?
It's possibly the toughest question that you have asked today, because it is linked to the entire growth of the nation, the growth of the Indian economy, the kind of direction that it will take. And as you rightly said, we are all very hopeful for the future. We are at 75 years, and some feel we are at that takeoff stage when the next 25 years can be a game changer. We have so many things going for us in the sense of having the world's largest population, as someone was saying, because we might have overtaken China, a young population, and exceptional human resources, talent in certain fields. And yet we seem to be still, falling short in some areas, because of which we continue to remain developing rather than a developed or even a middle income country. We are still our per capita GDP continues to be low. So I think if you were to link insurance to that, some part of this would happen. Both the growth of the economy and the growth of the insurance industry is linked. So in the sense that you would be able to our desire will always be to give the best insurance cover as that person needs, even to the poorest Indian, as much as we give it to the richest one. At the same time, there has to be a need for insurance. So that, as you said, the numbers are very large, but then if you look at the numbers in terms of what is not achieved, they are also equally large. So we are a country of 1.3 billion people, and even if I take that in a family, you need insurance for every family. So there should be at least 50 million life insurance policies, 50 crore life insurance policies that were to be issued at any point in time. Life policies, independent, that is not one person having two. But I think we are much shorter than that. And while some of the large companies, LIC does a very good job in terms of coverage, but the private sector, while they have done a wonderful job in increasing the insurance, new business premium, etc., the number of policies that they sell is still fairly limited. You know, they are selling it primarily to middle class. So I think widening this scope is something which is very important. But then the person insurance is not something you can thrust upon someone. It has to be felt. Even when we try to make it easy, as the Pradhan Mantri Jeevan Jyoti Bima Yojana or the Suraksha Bima Yojana for general insurance, there was not enough people who were really wanting to come and take it, you know, because they never felt that this is something which is required. So it's a complex question. It is a work which has to go parallelly. So I think, and it will happen as a function of two, three things. One is we have to get our basic economic model right. We have to have many more people who are employed, you know, who are contributing to employment. Employment gets generated. People, more and more people are able to come into the so-called middle income, the manufacturing or the services kind of. So you move from a rural-based economy to a more urban-based economy. More tier 2, tier 3 cities which are already happening, they keep happening. And then from the industry part, you have to get your mechanisms right, how you distribute. And it is, this word distribute itself, I have some notion. It is as if something you have decided and you have somehow got to distribute it. You know, that it's your issue. It's customer has no role in that. I have some products, I need to distribute it, you know. So it is basically customer, it's a customer value proposition, you know. So we have to make, in the insurance industry, has to be able to find new ways. And in today's world, it is possible. You ask the question of how they can do it. You know, in insurance, if you just have a digital platform, it may work for a few people like you and me who are financially savvy, technologically savvy. But in insurance, there's a lot of connect required. But digital can assist that connect. So you have people, the insurance agents who would go, now they can be much more empowered, talk to people in a manner in which they can understand and then take it forward.
That's a very interesting take, sir. You've given on distribution of insurance products, which I haven't seen before, that it is not for us to distribute, but for us to reach the customer. So I will change the lingo and I'll ask you a little bit about that. In reaching the customer, at the moment, there is almost an over-reliance or a heavy reliance, particularly for profitability for insurer, to reach the customer via a bank. And you know, you almost follow a bank route to reach the customer. Of course, LIC has a very large agency channel, and even SBI Life has a large agency channel, and most of the insurance companies have some form of agency or the other. But the reliance on banks to reach the customer to generate profitable sales is still significant in the industry. How do you see that play out as the economy unfolds and we do all of that? Do you see the reliance to continue? Do you see a resurgence for direct agency, or how do you see that playing out?
So on this, this is a very interesting question, and I think what has happened in India is actually certain practical things which have taken place post privatization in 2001. So if you were to see, as you said, there was only LIC which was doing the agency channel, and they have done a very good job in building an agency channel. However, in case of when the private sector industry was set up, there were three large banks, or if I take HDFC, they had a very large bank in the group who set up their life insurance subsidiaries. And as a result, bank distribution became a very viable model for these three large companies. So if you were to look, there are some 20 odd private sector life insurance companies. Many of them, barring the three I mentioned which are listed, and Max Life Insurance, which has a strong investment and tie-up with Axis Bank. These are the 4 institutions which have actually been driving the bank assurance channel. If you see the numbers, I think 75-80% of the business comes from them. So it is a very India-specific, context-specific reason why bank assurance is picked up. And therefore, because it is promoted by their respective banks, it is also a less expensive way of doing it, because the banks will not claim anything other than what it is due to them in terms of corporate agency commission. Whereas in other countries where the international insurers, foreign insurers operate, bank assurance is actually a more expensive channel than agency.
Correct.
Right? You might
Yes.
be aware of that. So it's a very different scenario in India because of certain contextual reasons. So now if the other private life insurance companies have to become viable, the agency channel has to grow. Now, I think the only gap that is there is the power of the brand. So agents find it very difficult, very easy to sell an LIC policy, because LIC, you would have read any brand survey, it is one of the most powerful brand, if not the most powerful brand in the country, financial sector brand in the country. LIC and SBI is virtually known to everyone. So an agent will find it much easier to reach out to a customer and say, "Yeah, LIC policy. This is an LIC policy." In Bengali, for example, some people call an insurance policy
An LIC.
मेरे पास एक LIC है, so it's very interesting. So the private insurers have a disadvantage, so if you go with X company and the agent tries, so they find it therefore more difficult to recruit or have very good agents. But I think again that gap can be bridged today through use of digital, through use of technology, where you are able to give comfort to people. And the larger companies, they will obviously continue to some extent to rely on bank assurance. But like SBI Life, I think even ICICI Prudential has now understood that, they were very good at agency in the beginning, and they are once again re-emphasizing. So
Right.
I think it will balance out.
So I'm extremely delighted to have had this conversation with you, and it's going great. So I will hopefully shorten the questions almost to very quick rapid fire now. And this is the last segment that we'll do. I will throw a question that you haven't heard before, and hopefully you will respond with your first instinct as quickly as possible. So on a scale of 1 to 10, how do you rate the progress made towards digitization by insurance industry?
6.
How many years before a private sector insurer overtakes LIC?
Stumped.
Okay. Tata AIA, Bajaj Allianz, and Kotak. Which one would you acquire, list, or capitalize?
Googly. Yeah, I'd leave it at that.
Okay. One insurance product feature that you would wish to buy for yourself but does not exist in the market.
It may exist in some form. I'm giving a slightly long-winded answer to a rapid-fire question. It might exist in some form, but I think one of the things which I will very strongly desire is to have a health component inbuilt into a life insurance product. And I know that life insurance companies, including the one which I worked in, have come out with that. But something which is simple, which has a life component as well as a health component, and very easy to acquire, understand, and then take it.
Okay. And the last question, direct or agency channels will outstrip bank assurance. Agree or disagree?
Agree.
Okay. It's been a pleasure, sir, talking to you, and thank you very much for coming again to support the Institute of Actuaries of India. And I am sure our viewers will love this. And we sign off here with Mr. Arijit Basu. Thank you very much for watching. See you soon.
Thank you very much, Kunj. Thank you to you and to the Institute. This was real pleasure talking to you, and I really enjoyed it. Thank you.